Good morning, Patrick at AUDUSD Principal. I've got some charts for you today. A few headlines going around, certainly on our radar. ECB didn't really do much above and beyond what was priced in. Euro lifted mainly because there was no real rate cut on the depot, which I would say without Brexit risk, this should be above 123. Excuse me, it'd be above 123 and beyond, really. But because of that risk, we did get some fading into that 121, 65, 66 area. But look, let's just crack on with the charts, because it really is all about Brexit and broad dollar too. First chart, euro dollar. Like I said, we had a trend channel coming up there all the way from this kind of 10th, 11th, 12th, all the way up to just recently. We've got bull flag. Expect 121 to hold for now. If that goes, probably looking at 120.36, and then you could potentially get a test at 119.60. But it's all about Brexit. It's all about cable, obviously. But you know, the euro, the price of the euro will get affected, and if that does get affected, then the price of the dollar will get affected. You've got risk currencies like Aussie and CAD, especially Aussie yen and CAD yen. They'll get hit hard if we don't get an agreement. Now, Bojo's in Brussels, but it doesn't mean that a deal has to be made by Sunday. That was a slight misnomer. Number 10 basically saying, look, some firm plans to be, need to be made by Sunday, but that we could eke out the rest of the month. So it could be a torturous long journey. Next chart. Okay, Aussie dollar, we really did crack through some decent levels there. And look, it's a really nice gradient on this trend channel up, looking for 75 to hold. But, you know, it was being a slight slouch with the rest of the dollars getting hit. But, you know, obviously euro was the big leader at the time, but, you know, it's making up a little bit more. Aussie CAD had something to say about that, because there was Aussie CAD buying. It's kind of interesting, but, you know, the crosses often were very powerful within Aussie dollar. Next chart. Oh, it's Aussie, sorry, it's dollar yen. Okay, the same difference really in every other day. It's rangy. We're ranging from 103.66 to 104.76. We did manage, like a bit like a caterpillar. We had that trend line higher, but it was all a bit too much. Then we had a leg up, a little bit of leg up, but we cracked that 104.20, and now we're consolidating it at the lows on the day, just around that 104. Bottom side, I feel 103.66 is not quite a formidable level down there. Top side, we couldn't make it to the Fibonacci, which is actually also a double top at 104.76. But, you know, watch this space. It is all quite self-contained, quite rangy on dollar yen. Finally, the big one, cable. The interesting thing about cable is this level, which was really a marine, is 132.90. It held so many occasions, it broke, then it held again, you know, just recently, but it was just too much. It was too much. Obviously, with a political currency, which it is at the moment, it's a 50-50. So you might get some sellers into 133, 132.91, but we have huge gap risk over the weekend. And keep your eye out on Sunday, and Wellington's open Sunday night. That's it from me. My name's Patrick Reed from the AUDUSD Principal. Trade safe. Have a great weekend.